Now, if you run across an institutional back lender, let me show you a few signs of an institutional back lender. Institutional back lender, now the pros are they typically have the highest leverage and the lowest cost for the most part. But because they're not true private capital, when I say private capital, I mean like individual investors that are putting in money into these things or capital investors putting money in, they're still selling to Wall Street, or they have institutional capital, or they have, bank lines that they're drawing off of. They're still not traditional lenders, right? So, which is good. They're not necessarily a bank, but they're using institutional sources. You still limit on the flexibility and then the closing time frames and areas that they lend in and they're not. Like, I'll give you an example. There was a lot of fraudulent loans in the Baltimore area, and that's one of the markets that we cover. A lot of the institutional capital just dried up overnight because they're like, we're going to wait and see what happens in Baltimore. We're not going to be able to lend there. Now, a private lender, they don't care. They're aware of this, but they're going to be smart and they're going to be local, and they know what areas to stick to and what areas not to stick to. So you got to make sure you're asking the right questions. If a lender says, let me order an appraisal and I'll tell you how much we can lend after that, ding, 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 probably an institutional back lender.